Welcome to the Silent Trading channel. Today I'll be analyzing the gold chart on Friday the 6th of March, and this will be a short analysis just to see whether the price will go down or will it start pushing up due to the non-farm payrolls news release. So right now we're going to be focusing on the chart in the 4-hour time frame, but before you guys watch, please subscribe, like, comment and share if you like this video and to support me in my trading journal. So let's go to the 4-hour candle first, or the 4-hour time frame. As you can see on the 4-hour time frame, price or the chart has produced a bearish price action right over here. This is a bearish price action after trying to reverse from here, but wasn't able to push up and break resistance, right? And after the chart wasn't able to push up and break resistance, the chart then goes into a sideways down direction, right? As you can see, this is a sideways down direction, each candle slowly moving down. And right now, the current candle has already attacked the support, right? This reversal support over here. This key support over here was already attacked, which means right now the chart is accumulating buy side volume. And by accumulating buy side volume, which means at the point where the non-farm payrolls news is released, right? At the point where the numbers is released, the chart right now may dump further, right? Dump further to where? It will either dump further to attack this support and drop down to this about 5,000, the 5,000 support, right? And then start reversing from here, or you can go all the way down and go all the way down to where? You can go all the way down to this sideways triangular shape, right? This sideways triangular frame that I've drawn, you can push down all the way to here, but it will be too much, right? Pushing down here will be too much for the chart to handle right now. So I'll see it can push down about 6,000 to 7,000 pips before pulling back up on the non-farm payrolls, or it can drop down 6,000 to 7,000 pips before producing a new bullish reversal. But right now, as you can see, the chart is accumulating buy side volume, which means the chart accumulating buy side volume, it needs to dump on the chart, right? After accumulating buy side volume, it needs to take out the buyers, which means the chart would have more chances of dumping right now than pushing up, right? So an expansion to the upside right now would be, I would say it would be a little less possible, right? It is more possible that the chart is going to drop, right? Dump on the price, dump on the market, and then either pull back from here or reverse from here, right? Because why? Because the chart, even the candle, even the support and resistance, even news, even indicators, all of these are tools of the big money, of the smart money, right? All of these are the tools that smart money release to trick you into buying and selling, which means when a chart is accumulating buy side volumes at support, when a chart is accumulating sell side volumes at resistance, it is telling you that the chart is going to expand, right? The chart is going to expand if it is attacking resistance, attracting sellers, attracting sell side volume, it is going to expand upwards, right? If it is attracting buy side volume, right, and even so, if it is attacking this support repeatedly, right, attacking and then pull back, attacking and then pull back, which means it is continuously attracting, accumulating buy side volume, which means once the price dump, it is gonna dump very hard on the chart, which means we can wait to buy after that dumping, which means if the chart is dumping right now, we're gonna wait to buy on the non-farm payrolls news release, right? If it dumps, we're gonna wait to buy. We either buy at this week over here or place a buy limit, or we place a buy limit at this low wick over here before the next support, which is a 5,000 support, which means our buy limit would have to be around here. If the chart has dumped enough, if the chart has taken out enough buy side volume, right, after dumping, and decides to reverse from here and push up, your order from here would be profitable and you would close as you deem fit, right? But if you're looking for it to reverse, you need to be able to wait for it to close around here and then create a bullish reversal and then start attacking resistance. So that is how we're gonna be determine whether our order should be closed, right? Should be closed immaturely, or our order should be hold on and wait for the best possible price at the best possible profit. So if it push down and then pulls back, you're gonna be closing your position as soon as you see a pattern. But if it push down, right, and doesn't pull back soon, and then start creating a bullish reversal over here, and then start pushing up, attacking resistance, pushing down at the next candle while not attacking support, and then pushing up, attacking resistance, pushing down, not attacking support, which means if the chart is continuously attacking resistance, but when it retraces down, it is not attacking support, which means it is not accumulating buy side volume, but accumulating sell side volume, which means the chart is gonna push down further and further. So right now, wait for the chart to dump and buy, or either wait for the chart to soar, right? Soar as high as it could and then sell at a peak price, and wait for the chart to retrace to clear off buy side volume, because when the chart push up, there will always be people panic buying or follow buying, right? And when people panic buying or FOMO, you're gonna be selling at a price where most people are buying from FOMO or fear of missing out. And after too many people buying, right? There are too many people buying, then you sell. When you sell, and the big money needs to clear off or take out all those buyers from fear of missing out, the big money will dump the price slightly down to clear off the stop loss, right? To take out stop losses, and then your sell position would have been able to take profit from about here, right? Which means if the chart is going to push up, right? If the chart is going to push up, it's going to push up. Nope. If the chart is going to push up from here, and you sell at around here, and if it retraces, it will retrace to about this week over here, right? And then start pushing up, which means if you get a short position or a sell position from here, you're going to be closing your position around here, right? And then as you can see, if it is able to break all of this resistance, this drop around here, this retracement around here is a retracement to take out buy side volume before pushing up further, which means if you sell over here and you close over here and you're anticipating for the price to push up further, you're going to be buying at this retracement over here. And if the price start pushing up and then attacking this resistance and is also able to close above resistance, you know that your sell position, your buy position over here is a safe one, right? And you're going to be holding on to this position until it retraces and then push, retrace and then push, right? And retrace and then push until it stop retracing but start reversing. And if it start reversing, the next candle retracement outward, you're going to be closing that position. And then if it start pushing down and then breaking support, the next candle retracement, you're going to be selling, right? So when you look at the chart, you look at the base price action, you look at the most basic thing is a price action. And my version of price action isn't those names that you call for the chart, like 3 man down, 3 army up, nope, shooting star, nope. My version of price action isn't those, but my version of price action is the trend, right? So when we look at price action, I'm talking about a trend. If the trend is bullish, the price action is bullish. If the trend is bearish, the price action is bearish. But what if after the price action is bullish, how do we determine where we're going to buy if you have missed out the best possible spot for the position? We wait for the price to produce more bullish price action. If the bullish price action is produced around here, right, and it push up and then it retrace, but we wasn't looking at the chart and we wasn't able to buy from around here, and then if the chart start pushing up and we miss the best possible spot, the next thing we need to do is we wait to see if there are any key level resistance or key level, right, key levels point, key level resistance. And if the chart is able to push up and then break some key level resistance, the next candle retracement we're going to start buying, because by attacking and then breaking key level resistance, which means the chart is accumulating sell side volume. And if the chart is accumulating sell side volume, the next candle retracement is a retracement to take out buyers before pushing up, right? So if the chart accumulates sell side volume from around here and then start retracing, it is a retracement to take out buyers. And if the chart or the market is taking out buyers, we are looking to buy because buyers are out of market. And if the chart start accumulating sell side volume, we know that the chart is accumulating sell side volume to take them out later, right? So if the charts accumulate sell side volume and then take out buyers first, which means it is looking to take out sellers later, which means if it take out buyers already and there are no buyers, right, the chart is going to push up. And when the chart push up taking out sellers, our buy position from here would be taking profit at this high over here. So after it takes out high, take out all the sellers, right, our buy position would have to be closed, and then we wait for the chart to retrace once more after breaking resistance, right? So if we miss the best possible spot, is that the reversal, we wasn't able to enter at the reversal because we wasn't looking at the chart. We then wait for the chart to break some key level support or key level resistance before we enter a trade based on that price action and based on that trend, right? So there are no best possible spot to enter a trade and there are no worst possible spot to enter a trade. It all depends on your understanding of the chart. If you understand the chart, if you understand the market, you will only be opening a position as good as your knowledge, as your experience can be. So if your experience is good, if your knowledge is good, and if it is a correct one, you will always be opening the right position no matter at which point in the chart. Even if it is at a so high level, right? Even if it is at a premium point in the chart, you will also be able to enter a position based on your understanding, because that understanding is what drives you to open a correct position. So right now, wait for the news to come. If it dumps on the price, if it dumps on the market, you're gonna buy, right? And wait for the market to retrace or pull back or start a reversal, right? But if it's pushing up, wait for the push up to complete, wait for the next candle to close above resistance, which means breaking resistance, and then after that the next candle retracement, we're gonna start buying. Okay, so for today, that's all I'm gonna be analyzing for you guys, and you'll stay tuned to my videos tomorrow. I'll be concluding what is happening on the chart for tomorrow, right? For Monday to Friday, about what has happened and what is happening and what is gonna happen for the next week, right? So this is all we're gonna be analyzing for today. So stay safe, trade with discipline, right? Trade with self-awareness, trade with mindfulness. Never ever trade using emotion. Always be aware of what you're doing. Always understand your action and the reasoning behind your action, because every action needs to have a reason for it to be the best possible action, right? I don't know how to say it, but I could only say every action you're executing, there needs to be a reasoning for it to be the best possible action, for it to be an action with good reasoning, right? So if you're acting with emotion, don't ever act. But if you're acting on reasoning, then act, right? So for today, that's all I'm gonna be saying, and I'll see you guys tomorrow, and I'll see you guys next week, and I'll see you guys from today onwards, and always, if possible, I'll be updating my videos every single day if possible. But if not, then stay tuned and wait for my next video. So for today, I'll see you guys tomorrow. See ya.